What if I told you that the financial system you are currently participating in, whether you are living in the United States or in the United Kingdom, is going through one of the most powerful structural transformations in modern economic history? A transformation so large that most people are not even noticing it happening in real time because it does not look like a traditional financial crisis or a sudden market explosion, but instead it looks like a slow, silent shift of power from traditional industries into something far more advanced, far more scalable, and far more disruptive. And that something is artificial intelligence, which is no longer just a futuristic concept but is now actively embedded into corporate profits, financial systems, healthcare, and global infrastructure. Every major wealth cycle in history has been driven by technological revolutions that most people misunderstood at the beginning. And this same pattern is repeating again with AI, where early awareness creates opportunity while late understanding creates regret. If you look at the current United States and United Kingdom stock markets, you will notice that while traditional industries are growing slowly due to inflation, interest rates, and economic uncertainty, the technology sector, especially artificial intelligence, semiconductor manufacturing, cloud computing, and advanced software systems, is accelerating at a completely different speed because these companies are not dependent on old economic models but are actively building the new digital economy itself. AI is not a single industry, but an entire ecosystem consisting of hardware infrastructure like chips, cloud systems that process global data, software platforms that deploy AI models, and real-world applications that integrate automation into finance, healthcare, transportation, and communication systems. And each layer plays a different role in how value is created and distributed. Most retail investors make the same mistake repeatedly, which is focusing on short-term price movements instead of long-term structural trends. And this leads them to buy assets after hype has already increased prices and to sell during fear-driven corrections, which is exactly the opposite of what professional investors do. Institutional investors follow discipline, risk management, and long-term allocation strategies instead of emotional reactions. And this is why they consistently outperform retail participants over time. When it comes to AI investing, there is no single winning stock, because the market is constantly evolving. But investors can position themselves across multiple layers of the ecosystem including semiconductors, cloud infrastructure, software platforms, and application-based AI services, while also keeping in mind that macroeconomic conditions such as interest rates and inflation in the USA and UK can significantly influence tech stock valuations in the short term. Artificial intelligence is not just another investment trend, but a foundational shift in how global economies operate, similar in scale to electricity or the internet revolution. And those who understand this early and position themselves with patience, discipline, and long-term thinking are more likely to benefit from compounding technological growth over time. Instead of trying to predict exact market timing, successful investors focus on staying invested in strong growth sectors, managing risk properly, and building diversified exposure to innovation-driven companies rather than chasing short-term hype or emotional decisions. The real opportunity lies not in reacting to daily market movements, but in understanding long-term structural shifts in technology and capital flow, and aligning your investment mindset accordingly. If you found this breakdown valuable and you want more deep dive content on AI stocks, tech investing strategies, and market psychology explained in simple but powerful language, then make sure you subscribe to the channel, like this video, and comment AI below so I can create a more advanced breakdown of specific companies, investment strategies, and portfolio structures that you can study for educational purposes and long-term financial understanding.